Hello, I'm Donald Leggett and welcome to Share Views, brought to you by London's South East. Our guest today is Keith Bush, Chief Executive of Cabot Energy, who have a production-led growth strategy and are currently extracting oil in Canada and developing onshore gas fields in Italy. Welcome, Keith.
Thank you, Donald.
In fact, welcome back, actually.
Yeah, absolutely, yeah.
Yes, so
it's good to be back.
Good to have you. Before we get into the detail today, could you, for those who are new to Cabot Energy, summarise the business and the growth-led production strategy which you have?
Well, we're very much focused on production because we feel that we need to have that clear revenue stream and cash flow to fund our operational activities going forward in the future. So we're focused on growing a production base in Canada, where we have a number of assets where we feel we can grow the production to a very decent level for a company of our size. And we also have some production in Italy where we have some exceptional exploration assets that will take longer to formulate a decent return from, but are very, very good. So very much focuses production, but we do have the exploration side as well.
And that makes you quite unusual because you're an oil and gas company with an existing revenue stream.
That's right, yeah, but I think we feel that we have to work within the bounds of our capital, and we have to make sure that works for us in the best way that we can. So all of our focus goes on the operational side of things and making sure that we add more barrels of production with each of the dollar that we spend, and that's really important to us.
Okay, if we could turn to the operational update, what have you been up to in Canada in the last month?
Well, so far we had a well workover campaign during the summer, but at the end of the workover campaign we returned to drilling for the first time since the end of 2014. So it was a bit of a learning experience for us. We sidetracked an existing well, which is a relatively straightforward option. But what we were doing was we were taking the existing well and we were sidetracking out almost horizontally, not quite horizontally, about 85 degrees, and we were trying to access a better part of the reservoir that we'd imaged through our technology, through seismic, and so we've done that. We've drilled this well, and we've had some very good results from it, actually.
Okay, if I could quote from your RNS, it has the latest sidetrack well has tested at significantly higher rates than forecast.
Yeah.
So what are the rates and what was the forecast?
So, originally, we're looking at doing this over a longer period of time with multiple sidetracks. So we forecast that these wells will do 80 to 100 barrels a day for the first 30 to 40 days of production. However, we drilled this well, as I say, we targeted the sweet spot in the reservoir, and it cleaned up a bit. We put on production on just a test period. Normally these wells have to work under a pump because there's not enough pressure below to flow them to surface naturally, but this one flowed naturally. And by the end of the cleanup period on the test, we were flowing at about 680 barrels a day, which was a fantastic result. We know that the well won't stay at that rate, but to actually get that rate in the first place is pretty unusual for a well in Canada. So very positive. We're taking a relatively reserved approach to this, I think, and making sure that we don't damage the reservoir. So the well's been put onto production, and we're going to flow at a much lower rate than that, about 200 barrels a day, just to see how that production rate holds up, because of course you can get initial high rates, but it's all really about how much the well delivers in the future.
Is that why you're not upgrading your forecasts? Because
Absolutely.
you're just taking a cautious approach at the moment.
Yeah, quite right. I mean, we have to make sure that we can deliver what we say we're going to deliver, and that well, it may be that it flows at that rate really, really well for a few days and stops, and that's no good to anyone. So we want to make sure that we get a decent production rate out of it for a constrained period of time, and I think we can then start to look to reflect that in our forecast for the future, because this method of sidetracking existing wells is something that we're going to look to do a lot more in the future.
So what does that mean for Virgo? What does that mean for Rainbow? Does it mean that you're inside, although you're calm on the exterior, you're actually getting quite excited because it looks as though you could exceed your own expectations?
Yeah, absolutely. We've got a number of sidetrack locations in the Rainbow area, which is where we've concentrated our work over the last couple of years. But of course we have a great big land position up in Virgo where we haven't done much work at all. On the operational side of things, on the subsurface side of things, the guys have been working really hard over the last 6 months to develop a view on the Virgo area, and we believe there we've got multiple opportunities to go and drill these type of wells that we've just done in the Rainbow area and target new areas of the reservoir and looking at similar sort of production rates. Hopefully, if we can use the same sort of imaging of the 3D seismic that we've used in this one, we'll take what we've learned from here and take it up to the Virgo area. So, yeah, I'm really excited about it. But we need to be cautious about what we're going to do for the next year, you know, and see where we get to with that.
So, to what extent is this a vindication of your strategy, do you think?
It's definitely getting there. It's a big step forward. We've got one more well to drill this year, one more sidetrack, looking for a very, very similar type of target where we've used the seismic to improve where we think the well will, or what the well will do. Next, it's a case of looking for the optimal locations next year, prioritising that programme, and I think once we get through that, we'll have a very clear picture of where we can go to with this asset. But you know, I think it wouldn't be. We had an exit rate, the plan for this year of 800 to 1,000 barrels a day. We should be pretty good on that, and then it's looking to double that by the end of next year and see where we get to beyond that. See how many opportunities there are out there to increase production.
You're talking about 4 sidetracks in 2018 winter programme. Does that mean 17-18, or does that mean heading into 18-19?
So it's 17-18, but we probably won't start those until the new year, till the January time. Most of that drilling will be done during January to March because that's the time we can operate best in the winter period. Then you kind of have a hiatus for April and May when everything thaws and you get a lot of water in the area. It's difficult to get heavy equipment around. When everything's dried out in the summer, hopefully we'll get back to drilling again. And you know, we aim to do 6 to 10 of these sidetracks next year. And we'll see where we get to with those.
Very good. And well cleanups. You've got 10 well cleanups planned. Mm-hmm. So what exactly? I understand what sidetracks are now, but what are well cleanups?
So the well cleanups, we've got a number of existing wells in the area that we should just be able to put back on production. Some of them need new pumps in them. Some of them need new tubing in them. So we'll go through those operations, very low cost, bringing back what is effectively tail end production of those wells, but each incremental piece that you put on top of the pile adds to the economic value of our asset, and it's, you know, each additional barrel adds on a very low cost in terms of operating costs and adds on a very significant margin in terms of the profit.
And how many years can you, in terms of the final cleanups as you're talking about, how many years will those fields be active for? Do you think?
They're going to flow for the next 10 to 15 years, and when you get into wells into their late life, which a lot of these wells are, they have a very low decline rate. So you get a very consistent production period over a long period of time. Ultimately, you're always reducing the amount of oil you produce, and the amount of water is increasing, but it's a very slow rate of decline for the oil rate, so it just gives us some certainty in terms of our base level production, and hopefully these sidetrack wells will increase that significantly.
And how much money do you predict you're going to need in the next year or two to actually achieve all these the various production work programs that you have in mind? So
I mean, ultimately we can spend quite a lot of capex, and if you think that each of the sidetracks is probably going to be about $1 million Canadian to execute, and we would look maybe in 2019 to do 30 to 40 of them, then that will be a lot of capex. But the actual asset becomes very cash flow positive even at a capex level quite quickly. So in terms of what we'll invest next year, probably $5 to $10 million, and then beyond that we'd look at how much we would need to invest to just get to this capex cash flow positive piece. And at that point, you can just keep investing, increasing your production rate to the number of opportunities that you have.
And what does your balance sheet look like currently? To what extent will you actually have to be refunded, or will you be able to do that out of current revenues?
So we have at the end of September we had about $3.5 million US on the balance sheet. We've done a bit of operational work up after that, but we've also had additional production revenue. We've got our major shareholder, High Power Petroleum, have an option to purchase another 25% of the asset in Canada for $4 million US, and we have a deal that we signed with Rockhopper earlier in the year for the acquisition of the Civita asset in Italy, whereby they will pay us some money on that. We should get in about $2.5 million US there. So when that all goes through, we'll be funded for the operations next year. We can always go faster. We can always do things quicker. So it's just a case of now assessing what our priorities are, taking stock of this result, drilling the next well, and then moving on from there.
And you mentioned Treviso in Italy. How are things doing in Italy? What's the state of play in Italy?
Yeah, good. I mean, I think Italy. There are other operators that are getting things done now, and it's a good sign that Italian regulations moving forward. We're very close to starting our monitoring phase prior to our 3D seismic. So the 3D seismic should be happening in Q2 next year. And the monitoring phase should happen over the next couple of months, just to make sure that there aren't any mammals in the area that we're going to be acquiring the seismic. So, yeah, we are making progress and moving things forward in Italy. It doesn't move as fast as Canada, but we're aware of that. We're very experienced at working in Italy. The Civita acquisition, the production that brings in, the well's performing very well, and the deal was effective for the 1st of January this year. That's great. There are other opportunities within that asset portfolio that we acquired to look at restarting production. And of course, we've got a lot of experience that we've had from Canada now that we can implement in Italy to bring those wells back on. So very positive. We need to do more work in Italy to get to the point where we're more comfortable with our production rates. And we look at other opportunities there as well, because we'd like to grow a good gas position in Italy, and European gas production is pretty high margin, really, particularly in Italy. And if you've offset that with the Canadian oil production, it works pretty well together.
And my final question: if you could sum up the outlook for Cabot Energy for me.
It's very positive.
There you go. That's a short and sweet summary. Keith Bush, CEO of Cabot Energy, thank you very much for joining us. And as ever, thank you for watching.